Welcome to Vantage Point Podcast, a podcast brought to you by NWR Communications and 92 Studio. This podcast is intended for education and entertainment purposes only and does not constitute financial advice. G'day and welcome to the latest episode of Vantage Point, where we get behind the leaders who are driving success within the Australian market. And today, we're privileged to have the co-founder and recently appointed Managing Director of Duratec, Chris Oates. Duratec is listed on the ASX under the ticker DUR. Before I introduce Chris, I'll just provide a brief overview of the business. It was founded in 2010, listed on the ASX in November 2020, and it's a market leader in asset remediation and protection. It's delivered a revenue CAGR of 34% in those 14 years, remarkably, most of which has been organic. Duratec's market cap currently sits around $300 million, and the company recently reported first half revenue of just shy of $293 million and EBITDA of $24 million, which sees it on target to achieve its full year guidance ranges of 570 to 610 and 45 to 52 respectively. Thank you very much for joining me, Chris, and congratulations on the success of the business to date. Chris, thanks very much for joining us.
Simon, thanks for having us.
Thanks for coming back down to Melbourne, obviously post results.
Yep.
Before we get stuck into the Duratec story, you've just stepped in big shoes with Phil Harcourt.
Yep.
Stepping down as MD. What led to that? Why do you think you're the right person? Obviously we do as well, but just give us the background on that for a start.
No worries, Simon. Yeah, thanks. Well, I had been with the company from the start, original founder, myself and Phil and Dean. So it's probably logical that I took over from that sense. Sort of have been, in the executive director role the whole time. So it's made a lot of sense. Phil's off now, retired, still on the board, which is good. So we've still got access to his knowledge and all the things that he gave the business over those years. So he's not lost in the business, but it's really good to have him there. But it's really good to take the reins and push the company where we think we can get to. And part of it, I think, really is getting backed by the people that are in the business themselves. So so they're really we've got an enthusiastic team and they've given me the support. So you can't do it without them. So it's good.
No, it's a very exciting milestone. And just talking to the business and the people.
Yeah.
First of all, what does Duratec do? But I'm also interested, since it started, how many employees have you got now? It's obviously a very different business. Yeah.
So, we started with probably 8 people was probably, what signed up and on, and now we have 1,300.
Yeah, shit.
So, so it's growing immensely. And it's not exactly linear, but it's, along that way every year we've grown significantly.
Yeah.
So it's been going, really well. So, and across that time we've grown into the defence, which has exposed us to, a lot of these major jobs and also, physically we've moved and created all those offices in eastern states as well. So, so the trajectory's been amazing, and we can still see a lot of growth ahead too. It's not like we stop here or anything like that. So, that CAGR's 34% and, we still see the opportunities to grow.
And just zeroing in on what Duratec actually does, there's a few
live
different parts.
Yeah, there's different parts, and so we do different things for different sectors.
Yep.
It's all about, at its core, we're maintenance remediation. We also do specialised construction. So the maintenance remediation's, what we started off as, and then based on the success of that, we've pushed into a bit of specialised construction, and that's basically it's where it's a bit of a difference, not just a greenfield site where you're building a multi-storey building. So really things like Oxley Wharf extension, which we're doing now, and Parks Wharf coming up.
Yep.
So you're tying into an existing asset, you're with an existing client as well. So really it's got to have that specialised edge to a construction project, and that's how we're sort of organically found our way into that space. So that's at core what we do.
Yeah, and I'm assuming in terms of the difference between just normal commercial construction and specialised, the margins are better.
Yeah, you do. You're building a rapport with your customer as well. So like we're always, if you look at who we work for, it's the end client. So it could be BHP, Rio Tinto, or the Defence Force. So whenever you get around those sort of customers, they're all about long-term solutions. So you get to work with them. So for us, it gets us a better quality outcome, safety, and margin.
No, that makes sense. And just casting your mind back to the early days in terms of because I think one of the significant things since being listed on the ASX is obviously co-founder led, significant shareholding. How did you go about actually funding the business to start It's obviously a significant risk. And how do you get early backing as well with not that many runs on the board, so to speak?
Yeah, it's. I mean, it wasn't that hard, but yeah, you could sense why people probably might be a little bit reserved. But what we did, we had worked together, myself, Dean, and Phil, for 16 years prior to starting Duratec. So we left an existing business that that we probably just didn't align with at that point in time. And then we looked for somebody to back us. And so we had Jim Gemelli from Urtec, who we knew, we had, as the old company had rented sort of a piece of land off him. We thought he was interested in our type of work. So they were more a construction-based business. Right. We were into the maintenance remediation. So it sort of had some logic to it. So we approached them. And then we put the money in along with our own money. At that point, then the three of us as founding directors put up our money as well. So I think that was part of the process. You can imagine the other funder or company in Urtec wanted to see that as well, and that's what we wanted. So, so at that point there, they had a 52% holding, with the remaining being with us three. And then, and so we shot off with a certain amount of money. They then lent us a fair bit more money across the course of that, and then after 5 or 6 years, we'd paid that off, and we're starting to generate a lot of free cash, and move forward that way until the IPO, when Urtec sort of sold down a little bit into that IPO.
It's been a good journey for everyone, really, in terms of them making good money and backing you guys, and vice versa.
Yeah, definitely. It's they talk about it as one of their best investments anyway. So it's it's worked out really well, and we've generated a lot of jobs, and enjoyed it along the way too.
And just again, sort of zeroing in on the difference between the business, from the start, how has it evolved in terms of their specialised, different parts of it? Talk to us about Mend as well. What are the? Because I think if you look from afar, it can look like just a remediation and maintenance company, but there's a fair bit more to it than that.
Yeah, we did. So we've always had a technical edge to it. So in maintenance remediation, we use the example of where a bit of concrete may fall off a building, and nobody knows why. Yeah. So generally the asset owner just wants it fixed, but they, before we do anything, we'll be saying, well, why did that happen? Is it going to happen again? So we've always had this technical element where we would want to get paid to do a survey and understand why that's happening. So us as Duratec on that journey, did a fair bit of that, and Liam Holloway, who we purchased his business for about $250,000, came across and really gave us some oomph and where he was heading. So he was doing that just as the investigation side, but not the doing side, whereas we do the doing.
Sort of end to end now.
Yeah, the end to end, and he's just reinforced it. And he was on a pathway to do visualization of assets. So put it in a 3D spatial reality modelling, and it was something we weren't into that much. So we figured that is the way of the future. We can see that, and once we saw that, what we can do now is just offer that to clients at the big end of town. This in a way futuristic way of looking at their assets and dealing with them.
Almost like a digital twin sort of thing, or?
Yeah, it is. We differentiate it because we call it a reality model, whereas a digital twin and BIM modelling is probably the other term, whereas we're using actual photos from the structure at a point in time. And so, we're doing a project now where there's 10,000 repairs identified after we did the reality model. And so the process is there we're fixing 3,000 out of those 10,000, and then we're going to take the photos again in the photogrammetry, align it on top of the model and do a refresh or an update of it.
That's pretty cool, isn't
it?
And
then, and then we'll, the other 7,000 defects are tagged for future work at some point.
And so you talked about the team growing from 8 to over 1,000 now. The importance of culture is probably underplayed, overplayed, depends on who you sort of speak to, but particularly within Duratec, I've heard you talk in the past about the importance of all rowing in the right direction and achieving as a team, and also having that customer loyalty, which is based on your people. How do you go about that? How important it is to the business?
It's everything we got really is set around culture, and it's just it's not really hard to do if you've got it at core. If that's what you want to do and that's what you do, you find it relatively easy, and you hope along that journey you employ those the exact same type of people. And if you think about it, I think you touched on it there, just on the when your customer demands that, you're going to, that infiltrates into your business as well, as in repeat customers. So if you want repeat customers, you've got to do the right thing. You do the right thing, you attract the right people. So we're all there for the long term. We're not, it's very different to doing a construction project where traditionally you hire, 200 people and at the end they go. We just don't have that interest. So we want to hire the people, provide a career pathway for the long term. And so it's very different in what we do. And, there's lots of probably construction-based people that have come across to us that really enjoy it because you could do anything. You could be a project manager, a CA, you could travel to all over Australia and do work, within the one company.
Yeah. And in terms of culture, when you look at Wilson's acquisition, sort of biggest acquisition that you've made, how are they sort of integrated in with the same Duratec business? How does that sort of how does that look, and has that gone well in terms of culture match and whatnot as well?
Yeah, no, really good. Yeah, it did. It reminded WPF, as we call it now, which is WPF Duratec. So it did remind us of what we were, and still are to a degree, but and in the smaller, days, I guess, when we didn't have as many employees. So it's really interesting watching their culture. And bear in mind, we've worked with them for some time. So really merging that in with, Duratec itself has been easy in the sense that just similar-minded people. And it's been really good. And it's been good for, I think, both sides. The WFP team really enjoy being part of a bigger entity and vice versa. We love that sort of enthusiasm they've got and the way they treat their customers. It's very aligned.
And what's the sort of mindset of the company based on acquisitions now? Obviously, you've got sort of just under $60 million on the balance sheet. Is it to grow aggressively through acquisition, or there's enough on the plate in terms of order book and organic?
Yeah, we'll always look at acquisition, but it's not an aggressive strategy we've got. So when you've got growth, sort of our natural organic growth has been 34%. We still think we can grow, at a nice rate into the future. We can, the cash can be used to just sponsor our organic growth. Yes, we can do some acquisitions. We bid off pretty well. But, I mean, in a way, you look at WPF, if we just organically get behind that, we can do, some really good growth, in percentage terms and dollar terms for that matter. And, we put $1 million investment into there in a robotic welder.
Yep.
So there's something I think, for a little investment, we'll get a return over the next 2 to 3 years in efficiency. So we certainly love the organic style, element of our business which we've lived in.
And I suppose there's an element of knowing exactly what's behind there as well. That if you're investing $1 million in a robotic welder and whatnot, the people who are running the business. It's not. Yeah, it's already integrated. There's much less risk, right?
Yeah, definitely. And it's one of those things. We never would have bought it unless the team at WPF wanted it. And they could never have bought it before with Mick as the previous owner. So you're sort of going, well, look, makes sense to us. We see it. You guys are going to have it and run with it, and they're just super excited by it. And it's up and running, and we watch this and we can see what an impact hopefully it will make.
So is that all live and done now, or is it just an...
Yeah, you do at the startup. You've got to do lots of coupons and testing. So we've sort of got our way through that.
What do you mean by coupons?
So just test welds effectively. So you got some pretty strong, heavy pipe wall thickness. So it's got to rotate itself as it welds, and then you get it tested. So this machine will record like all the temperatures and all the products you're welding with, and then it can actually send it off to the client and get it for full QA testing.
That's pretty cool, isn't it?
Yeah, so it's all recorded there, and so there's just heaps of benefits for it. So you get all that accredited, and then you're off and running.
And away. And EC&I, I've heard you talk about that before.
Yep.
Yeah, what is it? And also, in terms of how much of the business is it now, and how much do you sort of see it going forward?
Yeah, it's definitely grown. So the early contractor involvement, we do a lot of it, and we do more of it. It's something we've always wanted to do, and we push a little bit, but our clients are actually asking for it a lot more now. And it just, like our Central Park project's probably one that has a strong element. So I think we got paid just over $1 million to sort of work alongside the client. They're just designing, how many panels are up there for a start, and then
so is it almost like building out the scope of the project, getting
Yeah.
paid to build out the scope of the project, and then bidding.
Yep.
Yeah.
The work. So
Yep.
and some ECIs, by the way, are just straight out. There's not
They're
the intention
after.
to bid
Yeah.
at all.
Yep.
So they'll just go, we'll negotiate it, and so
Yep.
we might set up a known margin rate at the end of it, or put some lump sum for prelims if we know the quantum of the job.
Yep.
But basically, we're working out what's wrong with the structure, and we'll actually then work out how to make the panel. So in that instance, what they didn't know is how to take the panel off, what's behind there, so the insulation and the sisolation and things like that. So then basically we take that off, we study what's there, how to fix it, and then how to design it, how to build it, and then put it back on. So we're doing that over the course of a year, and then at the end we can say, this is exactly how long the job will take, this is how to access it, this is how to do it, scope it, all the draft drawings go to the client, and then they can tender, or they can just continue on. And it's often at that point, if you've got the trust levels right, you've got the program set, you've got the people to do it, why stop and wait? You probably lose 3 to 6 months in that process. So a lot of clients, and you look at defence even now, don't really have the timeline to probably throw those things in the middle. And why would you if you know you're going to get a value for money outcome?
You're basically sort of creating the test, knowing the answers for it. So why would you sort of start it all over again?
Yeah,
sort of thing?
you definitely are. And the thing with it is, at the end, you have an outcome that the client is wrapped with. You've got a good quality, good safety. So it's quite funny, at the end, you'll see of anything with any ECI, our customer will speak so highly of us, which means that's a win-win outcome. And again, you're dealing with the end users. So if you deal with the end users, they've got the passion to get it right, and you work as a team to get the job done.
And you talked a bit about defence. How important is that? How important has it been to growth over the last sort of couple of years? But how important, and how much reliance do you have on it? Going into the next 12, 24 months.
Yeah, it's a key sector for us. It's we first started working for Defence in 2014, and so it's become quite strong. The thing with it, we're growing the other parts of the businesses in mining and WPF, building and facades at the relatively the same pace as well. So Defence has swung probably between 40 and 60% of the revenue, and we hope to continue to grow all those sort of sectors at roughly the same pace. But it is important to us, and it's one good thing with Defence, they have this great pipeline ahead. So it's bipartisan approved, for the next 10 years in spend, and we're getting line of sight to some pretty good jobs there.
And just in terms of in your industry around order book, and I've sort of heard and spoken to different people, around revenue and the fluctuation of order book. Yeah. Is that the right way of looking at it? Because, even if, I won't have the exact numbers, but, the revenue and how much your order book's gone down, can quite differ, that it's not really, absolutely the 101 sort of metric to follow. Is that a fair statement?
It's definitely a correct statement, and something we've probably, put through in our presentation there as well, that, we and those stats are, we did $292 million worth of work. And at the same time, the order book only dropped by 70 million.
Yeah.
And we didn't win any big projects in that period of time. So
how does that work?
Well, it shows you the power of winning the smaller and medium-sized jobs, which we do like. So that's our business. We do 2,000 projects a year, so we're doing smaller ones, medium, large ones the whole time. And again, we want that balance to remain the same because it's good risk profiling. So what we've done there is we're probably showing how many, of these small and medium-sized ones, and probably more importantly, the MSA style of work. So that's our annuity sort of style, or our MSA as we call it. So a lot of that's mining-based stuff where you're on site, you've got an agreement to work with the client for 2 to 3 years, depending on what that contract is, and then they give you purchase orders to go through work. So it doesn't really sit in the order book as such. So we do a lot of that. But I mean, and important to note, we've still got $1 billion sitting in tenders. So that's stuff we've priced and we're dealing with right now. That's going to come out one way or the other. So, we expect to top that order book up again and win some of those big ones, our fair share of them. And so that order book will fluctuate, but it's also something we're not entirely obsessed with internally.
Because you don't have to wait 2 years to run the order book down. You'll have different smaller and medium jobs that don't even sort of pop into that. That's basically what you're saying.
That's exactly right. Yeah. So that goes up a bit, down a bit, and it was up as we mentioned there, and it's down. But if you go way back, it's done that forever. I think at one stage of our listing, we were 115 million in that order book, and got our way out of that with a couple of wins. So, as much as we do want more work sitting in that order book, we can, get it from a number of ways and means.
And the stock, certainly since I've known, it's sort of gone from 40 cents, up to 150, 140, 130, wherever it is now. And this is not sort of financial advice or anything like that. Why is it as exciting as it is now than it was at 40 cents?
For us, just what's ahead of us. We've just got an enthusiastic team. So, and we had some performance rights with 60 people. Is probably just over 60 people from way back. And they're fully invested in the business, and you do that right. And I think that's part of culture. It's part of retention. It creates a buzz, and people believe the sectors we live in, and the look at our total accessible market. We've still got a long way to go. So it's I think we're probably as best placed or the best place we've ever been.
And in terms of, it's more of a personal question, but how do you sort of look at Phil moving on and you taking the reins? How are you sort of want to? I saw the video with Phil, and he was much loved and admired internally. How do you sort of want to leave your legacy on the business, in 5, 10, 15, 20 years' time, whenever you do decide to ship off?
Yeah, I mean, you want to grab, the history of the company is such, and I've been there from the start, and we've got so much in common, between myself, Dean, and Phil, the way we started and what we were trying to achieve. So at core, nothing's changed. Legacy-wise, I think, it's just to keep building the business and growing it, giving opportunities to people, and that we have done all over this time. So hopefully got a few years left to be talking about legacy, but it's
that's what I was pointing to, 15 or 20.
15. That'll do. Yeah, I don't know how big we'll be then, but it's good. It's an exciting opportunity.
And last one, you talked about the performance rights and share price, sort of motivation, so to speak. During COVID, everyone was whacked. Everyone thought the world was going to end. Work is going to start again, et cetera, et cetera. It was interruptions. How did you, obviously lost, like most companies in the market, lost, confidence with investors. How hard was that to sort of win it back, or did you just, heads down, bums up?
Yeah, we probably were, because we listed in late 2020. So we, the initial part of COVID was out, and so it definitely shook the business up like it did everyone, and we had lots of projects just getting cancelled and shutdowns and all these types of things. So really you got to work out try and, as best we can back then, work out where the business was going to suffer, what was going to happen. And so we held together the team pretty well over that entire period. We didn't get any relief in the form of financial relief. Because you can imagine we were growing at that. So when, what happened was we stopped growing effectively for that period of time. So that was difficult. Yeah, we listed the business. Where it probably got us a bit more was the lag of the awards. So that took a little while to shake through.
Scary as well.
Yeah, because I think people were sitting there, and it was far different in Melbourne to Sydney to Perth. At that point in time, because coming from Perth, the lockdown was there as well. So a lot of people probably weren't just weren't giving you a job because you couldn't do it anyway, even if we gave it to you. So they spent a bit more time working their way through. So then when the projects come back on, there was a bit of a, people say a backlog, a little bit, but we've never dropped off since then. It's not like we did a whole heap of work and then it come off again. It's from that point forward we've been onwards and upwards.
And I do remember at the time after that, I think pretty much all of you bought more stock. Post that, it wasn't a small amount as well. It signalled the confidence in the business. Yeah,
we've had it the whole way through as well. So it's we still do. It's just a great business to be in. We in every sector we're in, there's great tailwinds. The future's good. It's enjoyable, you know. So yeah, we don't see any of that changing. Our views on the business are still there, that they were the whole way through. You know, the passion's in there, and it comes through hopefully in all the people that we employ and what we do.
No, it comes through in you, Chris. Thanks so much for joining us again.
Thank you.
And looking forward to the rest of the financial year and beyond. Well done.
Excellent.
Cheers. Thanks.